Okay, in this video, we're going to show Forex traders what is absolutely the most profitable way to trade the Forex market. Most Forex traders have a certain paradigm where they're trading using technical indicators on the same pairs over and over again. They're making 5 to 10 pips scalping, one or two pairs like the Euro USD. But we're going to show traders how to expand their trading to 8 currencies, 28 pairs, with movement cycles of 50 to 100 pips per trade, and this is in one trading session using the indicators and techniques that we're going to show you in this video. So let's look at the first example. This is the Forex Early Warning website, and this is the first example we'll look at. So this is a live indicator. It's called the Forex Heatmap. You can go to our website to learn all about it. So you can see that the New Zealand dollar is weak. It's the base currency here, cross currency here. The New Zealand dollar is weak on all 7 pairs. These are the 7 most liquid currencies. So this is a good time to consider buying the New Zealand dollar. And the Forex Heatmap specifies, due to some Canadian dollar weakness, it specifies the New Zealand dollar on the cross with the Canadian dollar. So here's the price movement, the associated price movement. It had a small gap, but after that it moved 100 pips. Okay. Now you could have also probably bought the New Zealand USD or sold the pound New Zealand. This is a very volatile pair. But this is what you need. You need consistency across one currency and just some slight weakness going in the other direction, unlike on the Canadian dollar or the USD. And you can get more pips than you ever thought possible just scalping 1 or 2 pairs. Remember, this is 100 pips after the gap, and this is the M30 time frame, and the very strong trade entry. This is what Forex traders are looking for. 100 pips, not 5 to 10 pips. The next example we want to look at is the Canadian dollar, and in this case, Canadian dollar weakness. So this is our live signaling system again. This is the Forex Heatmap, and you do get push alerts sent to your cell phone or mobile device when the Canadian dollar starts to weaken, when the percentages are really low but consistent. So when this hit, you got your alert, and the Canadian dollar was starting to weaken, and then it just sold off. So the Forex Heatmap specifies to buy the pound Canadian or sell the Canadian dollar yen. So this is the intraday sell-off. Once again, this is a big sell-off. We're not talking about 10 pip movements here. We're talking about strong moves. This second move, 60, 70 pips, it even sold off the day before. You're talking about movement cycles of 50 to 150 pips. The pound Canadian is a very volatile pair. If this pair moves 70 or 80 pips, the pound Canadian is going to move 100 pips because it's more volatile. You can also do things like basket trades where you push one button and sell all the Canadian dollar pairs at once. So the amount of pips you can get on the entire group of pairs is certainly maybe 200-300 pips, but it could be more on the more volatile on the more volatile currencies like the British pound. So this is the Canadian dollar weakness signal. You will get a push alert. You can also set price alerts at breakout points, audible price alerts, and you'll always know when the market is moving. Okay, this is our third example. This is the British pound yen. And so you check the Forex Heatmap. There's a link right there to click on it to go find out more information about the heat map. And remember, on the heat map, all 8 currencies, the 8 major currencies, are all stacked on top of each other, so you can see it on one computer screen. This is a very strong movement and a very strong signal. You not only have the British pound is strong, but the Japanese yen is weak. So that's a combination signal. We call it a slingshot. All 14 pound and yen pairs said buy this pair. And the result is that you have your initial gap, And this 135.20, this is 137.60, that's 240 pips. Now, this is not, 240 pips is just so far, and this is one trading session. This is 1 day of movement and one trading session on one pair. The combined movement of all of these British pound pairs was 600-700 pips, probably more in 1 day. And the prime candidate was the pound yen. Now, Forex traders are used to trading the Forex with technical indicators on 1 or 2 pairs on the small time frames, and they think that 5 to 10 pips is good. It's not. It's terrible. You need to rethink the way you trade the Forex. Get strong indicators like this and some very simple trend indicators. Stay away from all the technical indicators and use these great tools. We have a lot more examples on our website. There's the Aussie dollar strong movement, very strong cycle. Remember, this is 1 day of trading, and you can find all the examples right here on our blog. Just go to our blog and go to the trade entry examples, and they're also all over our website. So this is, in our opinion, the best way and most profitable way to trade the Forex of all the methods available. And this trading method and all the indicators you see are available at forexearlywarning.com.